Joining me now is Esther Oyanna. She's a currencies trader and analyst from Alpari. And today we're talking about how you can manage your risk of course, as an investor. Thank you, Esther, for being here. It's been a while. Nice to have you back here.
Thank you. Good morning.
Of course, a lot continues to happen on the global scene that, of course, it affects currencies at the end of the day. Now, we've seen Greece. Good news, getting the 100, the much needed
strong pull up that was last week.
Much needed bailout funds, and the German Parliament agreed yesterday. Now today, the Greek Parliament has also ratified more spending cuts. So it seems like all is going well for Greece and perhaps Europe as a whole. So how has I want to believe that that has been impacting positively, especially on the euro?
Yeah, the euro has been pulling up for a long while since last week, and actually we're looking forward to another move up, but for now, what is going to pend is remember that their ECB bank is loaning out money of 500 billion euro, and experts are like having a mixed feeling about it. Last year they had one, and there's an increase again this year. So, and they are like, with this figure, they're still crossing their fingers to see what is going to happen in the market. So we're still looking at that. When that happens, let's see what will happen to euro. It's going to be another push up, or it's going to be a pullback.
Okay, but is there caution on this on the part of investors?
There's caution on past investors.
But they have been pulling profits, of course.
Yes, they've been pulling profits well. Last week was one.
So right now, now is a good time to trade the euro.
Right now is caution. Caution is caution is needed now. Right now, there's caution needed on euro.
So where has that put the dollar? Because I know the dollar has, of course, been a favorite, been the safe haven in the last couple of weeks or even months, as this debt crisis rates.
No, there's a great thing coming up by 4 p.m. today. Ben Bernanke is speaking in the House. So everyone is also waiting for US to see if they can still be seen as a safe haven, or they'll now fall back to the euro.
Okay, so they're waiting for some positive comments from the Fed chief if he's going to bring out more or dig deeper into his toolbox to bring out more monetary policy. Okay, let's just today we're looking at the managing risks in investments. And most people looking for investment never think of the risks. And is every investment risk-free, or are there some investments that are not risky at all?
All investments are risky, very much. All investments are risky. In starting up any investment, you have to first of all understand what you are going for. Okay, what is investment you're looking at? Are you looking at it and is it a risky kind of trade or non-risk? Or when you're talking about non-risk, as the risk value is minimal. Because you have some high
level of exposure.
Yes, level of exposure is minimal. Okay, like if you're looking at the currency market, that's a volatile market. A volatile market. If you're looking at the money market, you have some short-term, long-term, and medium-term. So you must understand what investment you're looking at. Okay, there is no investment that is safe. But what makes your investment worth the while is understanding how to manage the risks involved in all your investments.
Now, I know you've come in contact with currencies traders like yourself and those who are aspiring to be currencies traders. Now, what is the general perception about risk? Do they, especially for those who are going into it for the first time, do they go into it with that kind of perception or mentality that, okay, maybe, I've seen so many people trading, and I have a couple of friends who have been trading and they haven't exactly been recording any losses. So that might give the impression that it's a risk-free market, and so many people come into the market, the currencies market, with that mindset, thinking that they can just come, play in the market, no risks.
Yeah, we come across that very well. You come across so many people with that notion. Okay, they've met the good ones, and maybe those ones have refused, or should I say it, out of negligence. They've not told them the bad side about it. That money management, you can remember we talked about that on Monday. Money management is very key in the currency market. And there was something like a research done that they just brought in novice to come trade the currency market, and they were taught who never knew anything about markets, and they were taught, the first thing taught was money management risks. The funniest part, when they did it, they all got it right. Why? Market will always repeat itself, come back to that same level you started with. And what was the success about? Learning how to manage their risk.
Okay, talking about managing risks, what are those three, three cardinal rules that an investor should have in his mind or in his hands at every point in time when he brings, in terms of as in his investment, trading at the currencies market? Okay,
the first thing you have to start with is understand the market you're going into. Okay, that will give you a gauge point. 2, understand yourself. Everyone is different. My risk appetite and yours very, very different. You can stand 20% loss or drawdown, I can stand 50%. Everyone's mind is different. With that will form your third notion, how to work with that. And you have to control your emotion as far as that is concerned. Learning how to control your emotion is very, very key.
And do you have any trouble? How has it been training currency or potential currencies traders in terms of helping them manage their emotions?
If when you have a case scenario of someone already coming with a preset mind, not a blank mind, two different things. I come with a blank mind as a novice. I don't know anything. I'm coming to learn. But people come with this attitude of, okay, I know what I'm doing. I have a knowledge of this and this background. I usually tell people, irrespective of the course you read.
Why do you think they have that kind of attitude when they come at first?
Let's put it like it's a Nigerian attitude. Okay, I know this. I studied this. Okay. So it's sort of like gives them that, like, you have an added advantage over this. But no, you're coming to a different market entirely, far different from what you see on your everyday market. Because some people tell you, is it not this normal exchange of money with the malam? So I tell people, no, you're coming to a different ball game entirely. So you must learn the ropes in this market and how to avoid the pitfalls in it.
Okay, so first you break down that notion.
Break it down.
Erase every
kind of, I know before, or I have learned. Even I tell people at times I don't mind walking into my other consultants or trainers and sit down and listen to them afresh. It gives me an idea, okay, yes, I'm learning something new every time.
Okay, so even as a seasoned trader, you can't stop learning.
You can't stop learning. You always learn.
Okay. Now, I know we have talked about the the PAMM account before.
Okay.
As an as an investment arm of currencies trading, is it only Apari that has this PAMM account? And what makes this PAMM account unique?
Apari is not the only one that has this PAMM account, the managed account. We have so many brokers who offer the services.
Okay.
But what makes Apari's own unique is you having access to your own system. Okay, you don't have access to the trading platform, the software you use in trading. For example, if I'm trading, I have access to my trading system. I look at all the currencies I'm trading, and at one point or the other, I can make my decision in closing some of the trades or allowing some of the trades run. But in the PAMM accounts, you don't have access to that. You only have access to the page where you can see in summary, also in the trading statement, what the fund manager is giving you on a daily basis. You can also monitor his activity. What makes it so unique is the risk management. I've checked through so many PAMM accounts, I've not seen that, the risk management, where as an investor I can monitor, just like I tell people in the stock market, you lose everything. Bonds market, treasuries, everything, you lose everything, you gain. But can you have like a stop out level? Okay, if it's coming down to this level, I like to put it, okay,
or make an exit.
Or okay, now I'm looking at this market now, it's increasing, can I move with it? Because the stops in the PAMM account, you can't move with it. Once it's coming down, it's already preset. Once it's gaining back up again, you can move your stop closer to the line.
So we have been talking about PAMM as being the investment arm of currencies market, and how you did say that the PAMM account of Apara is unique.
Okay.
But one thing you did also say that for a trader who has a fund manager trading on his behalf on a PAMM account,
okay,
did you say that he can actually have access to that account, or can only look at the page?
He can only look at the page. Even the fund manager doesn't have access to individual investor's account. The way it is done is from a pool of fund. Okay, the pool of fund is attached to your trading system. So like the software used for trading, the MetaTrader 4, there is no icon there where you can withdraw or deposit there. Okay, there are all different payment systems by brokers where you can make your funds deposit and withdraw. So the fund manager only has access to trading the total equity funds deposited by investors and his in his PAMM account for him to trade. So you are the investor on the other end. You can view the manager's performance through your own end. Okay, through your own personal area, what the manager is doing on a daily basis. So there's no issue of investor. I can have direct access. Okay, for example, I can see my system, the fund manager is placing Euro USD or dollar this, and I don't like what he's doing, I want to close it. You can't do that. The only thing you can do is just view at a glance, because it's always in percentages, okay, what he's doing on your account.
Now, what are the risks attached to this, the PAMM account, trading on the PAMM account? Any risks that investors should be aware of?
The first risk is understanding how the rating systems work. Okay, usually because some people just go to the website and say, okay, from our chart, okay, from our websites where you have the PAMM account ratings, they'll see the ratings for 1 month, you see the ratings for 3 months, 6 months.
By ratings, what exactly do you mean by ratings?
Traders are rated based on their performance.
Each month?
Each month. We have for 1 month, we have for 3 months, we have for 6 months, we have for full year. We even have the popularity list. Popularity list is based on the fact that you have, maybe in the past 1 month, how many investors have deposited in this fund manager's account. And the last list we have, as you can see, there is the list for a complete list. On the complete list, what you have there is from the ranking on the complete list is based on their returns as long as their trading time. So you may have somebody under 450 days trading and has given a maximum of 4,700%.
So it's basically that trader or that fund manager who's made the most money for
as long as he's been trading.
But shouldn't that be based on the pattern, because he may have done well in the last 3 months and going forward in the next 3 months he may not perform as well as he did, so giving him that badge or that medal for being the most popular or the most profitable fund manager as well.
We just brought out that rating system for people to just have a view about the PAMM account. That's why we usually run our investment class for people to look out for. What do you look out for in investment? Because some people don't even have a knowledge about investment, so we have to put them through. You start with first understanding the rating system, how it works. Okay, what's your projection on a monthly basis? Okay, are you looking at putting this PAMM account for a full year, or for 2 months, or for 1 month, or for 6 months? What's your projection like? Okay, if you're looking at, okay, you need a long-term trading. Okay, let's put it at 1 year. Let's target at 1 year. For 1 year, this is what you want. So what's your expectation for a fund manager in a year?
In terms of money, of course, returns.
Then the second part is you must take into consideration his drawdowns. Okay, the losses he has on every PAMM account. Okay, for example, I may place a trade now, and in the next 2 to 3 days I'll be in loss, but finally close in profit, and that is drawing down my equity. So those are the things you take into consideration. Not only the return on investment, his drawdowns matters.
Okay, so I reach an agreement with my fund manager on how much I expect him to return to me.
You don't reach an agreement with your fund manager because he's already there.
Okay, he's already there.
He's already there. The ratings, if you look at the chart again, the rating systems are already there.
Okay.
It's from their own ratings. You form your own idea.
Okay, but obviously I should have my own expectations as to what I should. Okay, so I have my expectations.
I can search. If you look at up there, under the rating systems where we have their names, dates since opened, and returns, I can decide to pick out my own search. For example, if I click on that icon there, on the red icon there, where we have the red icon with the box under, if I say 50%, greater than 50%, if I type that in, it's going to bring out the list of only fund managers who in the past 1 month has brought in 50% rates of return. So that's how the search is.
Not the fund manager who has had a history of making that much. It's just 1 month, because if it's 1 month behind just 1 month, that's not exactly a pattern or
a pattern. That's why I said it has to do with an individual. Make your choice.
Okay.
It's your pick. Okay, but it will just help you to put you through on how to work best with it. Usually I tell people for 1 month it's not a good tag for any fund manager. 1 month it's not a good tag. So look at it at the longer term.
Because if I have expectations, I see a fund manager who's made 50% for the previous month. Of course, my mindset will be, okay, this man is going to make 50% for me the following month, and that would be my expectation. And if he falls short, I'll be disappointed.
Yes, that's why we tell clients don't do that. Because 50% this month is not a guarantee of the next the next 3 or 4 months in 50%. Never. So you look at it on a long term. Have you seen his rate of return for 1 month, 3 months, 6 months? That will give you a form.
What would be the standard? Is it 3 months, 6 months? What should an investor peg? When choosing a fund manager in terms of returns? Looking at the history of a trader's returns,
okay.
Should I look at how he's fared in the last 3 months or in the last 6 months?
I look at 3 months. I'll tell you look at 6 months and look at his overall, because at times most of them go beyond 6 months, even in a year. So you can look at their overall chart. Like if you pick up the next chart that shows you a fund manager, okay, a fund manager for as long he's been trading. This is his chart here. For this fund manager, this is how long. This is his chart for the number of days he's been trading. So it has to give you an overformed view to that. Okay, from 0% he has grown to as high as certain percentage. It gives you another idea. Then if you look at, he's had drawdowns on the chart. It's been coming, it's going up, coming down, going up, coming down. So it gives you a good idea. For example, if I started with this fund manager at 100%, okay, and he's increased it to a certain percentage, let's put it at 500%. Before he comes down again, so let's put it at 300%, I'll have put a tag and a peg on him. That's how the fund PAMM account works.
Okay, so whatever drawdowns he has, once we have set what my risk limit, and also my expectations in terms of returns. No matter what drawdowns he's had, should I still be expecting that return? Of course, I will take into account the fact that I know he will have drawdowns, I know he will incur some losses, but should I be excluded from what I should be expecting in terms of returns at the end of the day, or is it part of it?
When you're taking into consideration returns, you have to take into consideration the drawdowns too.
Yeah, but we have reached. Okay, maybe not between directly.
It's not an agreement, because if you look the way the PAMM account works.
Expectations. I told I've said this is the amount of money I want at the end of this month.
Okay.
Loss or no loss.
But it's not possible. It's not possible to have an expectation of 50%. Just like if you look at your bonds or equity, if you have a percentage returns, you're not expecting that to happen. Because this market you're talking about is a dynamic market. Forces beyond everyone's control happens in the market. So you don't expect, okay, for example, I'm expecting 50% in the month, and he had a drawdown of 20%. So no matter what happens at the end of the month, I'm expecting to see 50%. It's not possible. Not possible.
But I should see a significant portion of that. Okay, maybe not, obviously not 50%, but maybe 25%.
That's why I talked about the drawdowns. So if I'm looking at a trader,
that would mean that you're saying that okay, maybe not 50%, obviously, but I could actually have a draw. Are you saying I could actually have a drawdown or a return of as low as 10%?
It's possible. Possible. That's why I said drawdown matters. Very important in the PAMM account. Drawdowns. Very important, because you shouldn't pick a fund manager just only on his returns. Look at the worst day he had a drawdown. That will give you an idea of the kind of fund manager you're looking at. So everyone usually have an expectation. Some will tell you, okay, for the past 3 months or 6 months, I don't want a fund manager who has had a drawdown beyond 10%. So he doesn't, they don't look at, okay, even if the returns is above 100% or even 50%, but that drawdown to them matters.
So you would advise to for more focus to be on
focus on his drawdown.
On his drawdowns.
But don't fully focus on his drawdown, because there are days that are selling days for these PAMM managers. Yeah. If they have 1, 2, 3 months, they're doing so well, then just 1 month, just like what happened last week. So many traders were expecting the market to have a retracement zero, but it kept on going and going and going and going. So many people had their fingers burnt. There's usually those kind of things that happens in the market. So many people had their fingers burnt, and they were like, wow.
But did Alpari see that coming? Did you
see that coming? In what sense?
Did Alpari also get their fingers burnt?
Let me say, Alpari is a company, but let's say individual
traders.
So many individual traders were, but some people who had their money management in place didn't suffer.
Okay, we're able to hedge against that.
Yes.
Okay, interesting. Now let's talk about how we're almost out of time here. Defining your risk limits within the PAMM investment account.
Okay, if you go to the next chart that shows us the PAMM account manager, like now this is a page showing you like a fund manager. He's opened an account with the PAMM account manager. He's made his deposits. Okay, it will tell you the name of the PAMM account manager, when he started, when the date he created this portfolio with him. Okay, so in setting risk limit, he starts with, okay, when did I start with this fund manager? Maybe I started with $1,000, and now he has increased it to $1,100. Okay, setting your risk limit, you look at your equity, because there you have your PAMM account equity, you have your net equity, you have your outstanding remuneration, shows you the amount of money you're owing your fund manager. So for my equity, it shows me this is the current money he's trading with. Net equity is showing me my initial funds plus the profit he's made on it. So if I'm to set my calculation, my risk limits on my fund manager, I look at my equity, my current equity.
Okay.
On my current equities, further down, I'll have my general monitoring. There's something known as monitoring your account, where we have the share counts, we have the share price.
Okay.
The share count is giving you an idea of the value of your own money in the total equity the fund manager is, and the share price is the value of the fund manager. Okay. As a fund manager is trading, his share price increases. When he's losing, his share price drops.
Okay.
So the simple mathematics calculation we tell people during our classes, okay, if you multiply your share count times your share price, is going to give you your current equity on the PAMM account. So let's assume my current equity right now is $1,100, and I'm looking at the PAMM account, and I started it with, let's assume it's $800. Please, fund manager, you've increased that total, let's put it at $300. If you're going to drop, I don't want you to go beyond this level. Let's assume I pegged it out at $1,000.
Okay.
So a simple mathematics calculation. Remember, share count and share price equals to equity.
Okay.
So